Bloomberg Audio Studios. Podcasts, radio, news. Bloomberg Tech is live from coast to coast with Caroline Hyde in New York and Ed Ludlow in San Francisco.
This is Bloomberg Tech. Coming up, President Trump calls the Intel CEO highly conflicted and urges a resignation, causing shares to slump. Plus, Apple announces it's added $100 billion U.S. investment as it dodges chip tariffs. We discuss the likelihood of a U.S.-produced iPhone. And a number of earnings are out. Our discussions with the CEOs of Lyft, DraftKings and Duolingo throughout the hour. But first, we dive deep into our top story, which is Intel. Shares currently off by 2.25%. They were lower by more than 5% in early trading. All of this as we see President Trump call for a resignation of Lip Bhutan, who only just took over in March 2025. This following Tom Cotton, the Republican senator, deep diving in his relations, Lip Bhutan's, to China. Let's get the context for you. Peter Elstrom joins us for more. And we see that there's a concern about his CEO role at Cadence Design and their relationships with China, but it was well known that he's been a long-term investor in China himself, Peter.
Yeah, this was certainly a big surprise. I don't think anybody saw this coming, certainly not in the tech industry. Trump comes out and he calls for the resignation of Lip Bhutan, who, as you say, just arrived in March in that CEO role. He'd clearly been vetted very much by the board before he got that position. Now, what they're talking about, so Trump did not explain exactly what he's talking about with these conflicts, but as you say, it comes in the context of Tom Cotton, the Republican senator, asking questions about Tan's ties to China in particular. There's Cadence Design System, the company that Tan ran for more than a decade. They have done business with China. In fact, they pled guilty to doing some business with a university that's affiliated with the People's Liberation Army there. In addition to that, Tan worked for a long time in venture capital, making investments in companies, including companies in China. He made some investments in SMIC in particular, which is sort of the most advanced chip maker within China. So Cotton was asking questions about how those investments are doing at this point, if he still has any conflicts of interest. Trump didn't go into those details in particular, but he did flag them. Now, it's important to say what Intel has said in the past. They've said that they value national security, and Tan is certainly aligned with U.S. interests in the region. You got to imagine that the board of Intel is going to come back pretty forcefully in this situation because they're the ones that hired Tan in the first place.
And we're already seeing the statement from Intel in response to Republican Senator Cotton's query, saying Intel and Mr. Tan are deeply committed to the national security of the United States and the integrity of our role in the U.S. defense ecosystem, because this is where the question lies. As someone who potentially, and we yet to hear whether he really has disclosed how much of his venture investments he still holds in certain Chinese startups, and indeed he had prior board experience at SMIC. What are the implications for the investment, which Tom Cotton makes, of $8 billion of U.S. chip funding into Intel to manufacture locally for potentially the U.S. government and indeed the Department of Defense?
Yeah, there are a couple of very big questions here. I mean, first of all, Intel's board ousted Pat Gelsinger, the previous CEO, last year. They brought in Lip Bhutan as that replacement after a long search. They looked at a bunch of different candidates, and the best and the brightest in the chip industry are not dying to take on Intel. It's a very difficult turnaround project at this point. In addition to that, Intel is supposed to be a cornerstone of this Washington-led effort to rebuild the semiconductor industry in the United States. Of course, it's American. They want it to be part of this whole effort to bring chip manufacturing back to the United States. They've also given money to other companies, including Taiwan Semiconductor, Samsung Electronics, but Intel was supposed to be really the cornerstone. They were supposed to do some work with the military in particular. As you mentioned, they were in line to get about $8 billion, but it's unclear exactly where that money is going to go at this point. And one of the issues for the board is going to be if they're going to stand behind Tan and support him as CEO, is that money coming from the federal government going to be in jeopardy?
And the context also being that Lip Bhutan was on the board of Intel for a very long time, so they're well aware of all of his prior history. But what's happened more recently, Peter, is the articulation from Lip Bhutan himself that he might not go along with fabrication of chips here in the US much longer anyway.
Right. This context is important also. His predecessor, Gelsinger, had pushed very hard to rebuild Intel's manufacturing expertise. They're in the process right now of trying to develop new techniques for manufacturing. They appear to be making quite a bit of progress on that front. Now, Tan has said he doesn't believe if you build it, they will come. He's referring to this whole foundry business where Gelsinger wanted to compete pretty directly with TSMC in making customized chips for the likes of Apple and NVIDIA in particular. Intel's not made a whole lot of progress on that front. So Tan has said he's not necessarily going to stick with that strategy. That, of course, kind of runs counter to the Washington effort to try to rebuild the U.S. chip industry. If he's tentative with some of his investments, that may be counter to their priorities at this point.
Peter Elstrom, brilliant research. We thank you very much. Let's stick with, the Trump focus on semiconductors right now. For more, Bloomberg's Tyler Kendall joins us from the White House because President Trump, to that end, we're just hearing how Intel fits into the broader idea of bringing manufacturing back to the United States. A big, hefty tariff being promised on semiconductors unless you make and build in the U.S., Tyler.
Right, exactly, Caroline. President Trump declaring his plans for a 100% tariff on chips unless the understanding is a company makes a similar investment commitment to what we saw yesterday when Apple's Tim Cook was in the Oval Office, a pledge to at least move part of their manufacturing reshore supply chains in the U.S. Then those companies would be exempt from this chip tariff. But there's a few different important distinctions that we have to make, including, as you well know, that these big tech companies have been experiencing at least a temporary reprieve from tariffs since April, when the administration first launched that Section 232 investigation into the entire chip supply chain, which extended to those consumer electronics, for example. So as we wait for that formal investigation to wrap up and a formal announcement on the tariffs, one of the big questions here is whether or not that reprieve is going to extend to some of those other items that have been under investigation, like what chips go into, such as smartphones or cars. So the conversation is going to start to turn to whether or not there's going to be any sort of carve out here, such as Apple with its iPhone, for example, because those are expected to face a separate levy. And Caroline, we know that the industry has been lobbying this White House. Of course, Tim Cook was here yesterday, but then just hours after that visit, we had NVIDIA's Jensen Huang also meeting here with President Trump at the White House. And the White House says that cumulative, the total that they've gotten in investment when it comes to these big tech companies now is over $1 trillion in pledges.
And a lot of that money coming from big Asian tech builders like TSMC in Arizona, for example. We've also understand from leaders in Korea that they think Samsung and maybe SK Hynix have some sort of carve out here, Tyler. We're really getting drip-fed information.
Right, exactly. And at that point, it looks like really most of the tech sector is covered here. You had mentioned, so if we just, show the companies that could be facing this exemption, Apple, NVIDIA, TSMC, South Korea, Samsung, and SK Hynix. And really, this has been a big push from this administration from the beginning. We saw a lot of these tech CEOs attend President Trump's inauguration as just one key example here. So that's why it's really interesting to also see this dynamic that's starting to emerge with the Intel CEO and how President Trump really does feel heavily involved when it comes to the private sector and trying to get to this ultimate goal of reshoring manufacturing. Though, of course, as you well know, and I know you're about to discuss, this does fall short of the administration's initial push here to reshore manufacturing completely into the U.S. And we know that's going to be pretty infeasible when it comes to the financials, but also just the timeline, which makes that Intel dynamic even more interesting, since we do know that we need their chips to make this happen.
Weaving it beautifully together, Tyler Kendall, we thank you from the White House. Let's talk some more then about the impact of tariffs on big tech. After Donald Trump, of course, promised to exempt companies like Apple, as Tyler mentioned, that move production back to the U.S.
We're doing these things now in the United States instead of other countries, faraway countries. This is a significant step toward the ultimate goal of ensuring that iPhones sold in the United States of America also are made in America. With the mass infusion of capital it's announcing today, Apple will also build a 250,000 square foot server manufacturing facility in Houston and invest billions of dollars to construct data centers across the country, from North Carolina to Iowa to Oregon.
Carolina Milanese, principal analyst at Creative Strategies, joins us hot on the heels of that moment of Tim Cook in the White House, $100 billion extra being committed, that's $600 billion in total. What did you make of the allocation towards glass, for example, particularly in Kentucky and the United States?
I think Tim Cook is being very strategic about giving the administration what they want, which is investment in the U.S., but doing so in a way that is feasible. So it's still not about bringing production of the iPhone back, but really leaning into some of the partners like Corning and manufacture. The mastery of this is not just about the iPhone and Apple Watches that are sold in the States that will source glass from Corning in Kentucky, but internationally. So it's given that extra part to the administration about saying, okay, we are manufacturing here and shipping outside the US the glass that goes in every iPhone and every Apple Watch.
It's interesting, we are seeing Tim Cook speaking there, but he was previously holding a box that contained circular Corning glass plaque engraved with the president's name mounted onto a 24-karat gold stand, which we understand was also designed by an Apple designer who was previously a US Marine, Carolina. This was politicking at its best from Tim Cook.
Absolutely. There was a lot of political theater during that press conference. It was about really making sure that Apple doesn't get into the eye of the cyclone when it comes to tariffs and really lifting what is possible. So, for instance, the mention of Houston and the server factory. Again, we are not talking about bringing iPhone or Mac, for that matter, or anything else back to the U.S. We are trying to invest where it makes sense from a business perspective for Apple while creating some jobs, but most importantly, bringing money back to the U.S. and letting the administration then talk about it.
But we actually heard President Trump talk about it with the words coming out of his mouth that was the long-term goal of having US-sold iPhones made in the US. Is just the glass enough and maybe the odd wafer and semiconductor?
Is enough for now. The long term is really critical here because it will take time. The supply chain, most of the supply chain is still not in the U.S. The skill sets that we need from just a factory perspective and workers is not in the U.S. and the cost, of course. So is giving enough during the 4 year of the administration and, to placate maybe the demands and continue to invest in America.
Interesting that skill set you say, and they're actually Apple investing in Detroit in particular on sort of a manufacturing academy for training people and companies in terms of manufacturing locally. But going to just the intricacies of supply chain here, Carolina, you're getting glass from the US in Kentucky and maybe some wafers in the future. And then you're shipping that back to China to then have it all put together and neatly built and then shipped back to the US. This feels very expensive.
It's cheaper than not having it done here, and that's the problem. We don't have the facilities yet, and I think it's interesting, as you pointed out, the Detroit manufacturing learning facility that Apple is setting up, because maybe the point is to create different sets of skills that are linked to automation. And that is where maybe with AI and automation, we will see manufacturing being brought back to the US. But yeah, shipping back and forth is not ideal, but the pieces that you're shipping back and forth and where the rest of the iPhone is still in Asia.
Briefly, I lean into your supply chain expertise here because you don't just cover Apple, a plethora of companies. What do you make of this threat for 100% tariff on semiconductors and who that ultimately implicates if they don't get a carve-out?
Well, obviously, that is, we've seen the impact of the tariffs so far on earnings, and we're still in the middle of earnings season. But what is important that we don't have the clarification is what that building in the U.S. means. How much investment is a company going to have to make in the U.S. to not fall into this tariff promise of 100%? And Apple seems to have made enough. NVIDIA is also investing here, and I'm sure others like TSMC have done will continue to do so.
Carolina Milanese, Granular, we thank you, Creative Strategies. Shares of Lyft, let's check in on them, because the company reported earnings after the bell yesterday, including record number of rides completed. We're currently up 3.5%. Lyft CEO David Risher joins us to talk us through the results that for some, there was a bit of something for everyone. The revenue number behaved perhaps a little bit shy of expectations, but the sheer number of people riding with you at a record, what's driving that, David?
Yeah, I mean, I love that fact, the sheer number of people riding with us, because it shows that we're doing something right? So I've been saying for a long time, customer obsession drives profitable growth. We're now profitable. We're growing, this is our 9th consecutive quarter of double-digit growth. And in terms of customer adoption, we've never had more riders and drivers on the platform. So, what's driving it? It's innovations like Lyft Silver. It's partnerships like our DoorDash partnership. We just announced a new partnership with United. A lot of the sort of ecosystem work we're doing is really helping us grow faster than ever.
Let's talk about partnerships when it comes to autonomous, because that's where the future, where the puck is moving. How are you ensuring that you're moving with it and taking on what seems to be future competition coming from, the likes of Waymo, but also even a Tesla?
Yeah, you know what? I don't think of it as future competition. I mean, of course, there'll be competitive skirmishes, but big picture, as self-driving cars come onto our platform, it's going to expand the marketplace. And we can see that already. Even in the cities where self-driving cars are operating in the U.S. right now, we're seeing something like 5x the growth of cities where they're not operating. So, because why? They're safe, they're interesting, they're kind of, they're novel, they're reliable. In terms of partnerships, we have a couple of great partnerships. We have one with May Mobility, which launches officially this summer in Atlanta. So you can take a self-driving car if you live in Atlanta, starting in a little over a month, we hope. And then big picture, we just signed a big agreement with Baidu, who is one of the world's largest, probably the world's largest self-driving car company to expand into Europe, into a couple countries in Europe. So a lot of action going on in the self-driving world. Obviously still very early, but we see huge opportunity for us in the future.
Yeah, planned Germany, UK 2026, David, with regulatory approvals. But speak to that international growth that you've really brought to bear of late. How much is that a winning formula for revenue, for profitability?
Yeah, for both, I think. And actually for resilience, too. One of the things that I've seen over the last 2.5 years since I've been in this job is being so focused on North America has been great because it's allowed us to really innovate and drive, the industry forward. But now that we're in a very strong position, we can afford to, and frankly, sort of our customers want us to be a more global company. So we just acquired a company called FreeNow in Europe. It's a taxi-focused aggregator. The taxis in Europe, of course, this well, are sort of a higher end product than people might think in the United States. And so it'll allow us to have a footprint across Europe. Then when we tie it back to your earlier question about self-driving, as self-driving comes to Europe, and Europe is a little bit behind the United States, the relationship that we now have with regulators and, of course, with millions of customers is really going to help us form a platform that we can build on to bring self-driving cars to the UK and Germany and hopefully beyond.
Okay, so when you're leaning into some of these expansions more broadly, will there be more M&A to play here? You've already done it in Europe. I know you've got to integrate, but would you look further afield too?
Maybe. You sort of never say never about this sort of thing. I think we're in a very strong position now to do this kind of work. But as you say, the first order of business for us is that integration work. And we just closed the FreeNow deal last week. I was actually in Barcelona the week before with a team there. They are so excited to get started. And already now, if you open the FreeNow app in Europe, you'll get a prompt that says, we're a partnership with Lyft, and vice versa. If you open the Lyft app in Europe, maybe more importantly, you'll be directed to go over to FreeNow. So we're just beginning that integration. I think there's a lot more work to do there before we really think about additional acquisitions.
And David, you've got such sort of a bird's eye perspective on the consumer really at this moment. How resilient is that consumer, particularly here in the US, people trying to read the tea leaves?
I understand, every single day people sort of look deep in the teacup and try to figure out what's going on. All I can say is if you're looking for weakness, look elsewhere. We're not seeing it. We're seeing record rides, double-digit growth, even airports, which people often look at as sort of a leading indicator. Now, it's true. I think TSA volumes are moderating a little bit, but we're growing faster than TSA volumes are, and we've grown airports now quarter over quarter and year over year. So it's such an interesting thing. I know people are sort of desperate to find, sort of the cloud and the silver lining, but at least from our perspective, we're not seeing it.
Lyft CEO David Risher, great to have you back on the show. Stay well. Thank you. It's time now for Talking Tech, and first up, SoftBank swung to a quarterly profit, posting a net income of $2.9 billion in the fiscal first quarter, more than double what analysts had predicted. Now, the surprise gains are a reflection of CEO Masayoshi Son's aggressive bets on artificial intelligence. Plus, China's export growth unexpectedly accelerated in July as global demand helped offset a slump in US shipments. Now, total exports rose 7.2% from a year earlier to $322 billion. This as China saw strong shipments to the EU, Southeast Asia, and Australia and Hong Kong. And Amazon's Zoox gets an exemption from the Trump administration, allowing its driverless vehicles to operate without a traditional driving control, like steering wheels. Now, the decision is a boost for Zoox, which plans to produce 10,000 purpose-built robotaxis a year at its California facility. Now, coming up, if you were betting we'd be covering more earnings news, you'd be right. We've got so many CEOs coming up. DraftKings CEO Jason Robins is one of them. He joins us next. Meanwhile, let's just check in on the world of semiconductors. That 100% tariff being threatened if you don't build in America. But who's building in America? Samsung, SK Hynix, Korean leaders saying that their stalwarts in the world of technology are getting an exemption from this 100% tariff threat coming from the White House. The question is, who else gets those exemptions? TSMC, Apple. More on that next. This is Bloomberg Tech. Welcome back to Bloomberg Tech. Let's take a look at these markets, because actually the Nasdaq outperforms other indices today, and we're helped in part by chip makers. Look at the big rebound we're getting in AMD after yesterday's sell-off post its earnings. We're now up more than 6%, basically shaking off yesterday's sell-off. That's as we really focus in more on the geopolitical picture here. Same for Nvidia, up more than a percentage point. What carve-outs will we get for semiconductors that are made and shipped into the United States? Now, President Trump threatening 100% tariffs on chips made abroad, imported into the US, unless you're investing big in the United States. And what are these companies doing? Investing in the United States. We dig into that a little bit more later on, but move on to some of the earnings picture that we get. Mixed reactions that we're getting for the likes of Airbnb, off by now more than 7%, as we don't see a re-acceleration in growth that so Brian Chesky wants to do. And DoorDash, though, up more than 5% as it manages to deliver once again in terms of the food into your home and its expansion with M&A. Let's get into those numbers more broadly with Natalie Lung, who joins us after what was a very busy post-bell for you. I want to go for the optimism first. DoorDash, what's it doing right?
It's been increasing a lot of the user frequency and membership from its paid program, Dash Pass, and people are ordering more restaurant orders as well as the newer categories like grocery and retail. And
what do they speak to in terms of the expansion plans? Because this is a company that's been acquisitive. We're not seeing it show up in the numbers yet because they've got to absorb the business, particularly over in the UK for Deliveroo. But what is the potential here?
Yeah, so that deal hasn't closed yet, so they're still expecting it to close in the fourth quarter. So we'll see later this year in terms of what it adds to their outlook. But what we know is that they have completed acquisitions of restaurant tech company, 7 Rooms, as well as advertising company, Symbiosis, and that's already adding to their sort of their enterprise offerings for restaurants.
It's really interesting. We just had David Risher from Lyft on, and his exact response to what are you seeing in terms of consumer weakness was, you're not finding it here. It seems as though we're not seeing it in DoorDash. They say they've got high levels of consumer engagement. But flip over to Airbnb. Look, they've been trying to win us over, not just with what's happening in terms of travel and houses, but access to experiences. Why aren't they able to re-accelerate growth at the moment?
So there are a couple of factors working against them. First, they've warned that the growth might moderate later into the year because what happened last year was that people actually made those trips that they delayed. And so results were very strong last year. And so the year-on-year comparison would be not as strong this year. And if you look at the second quarter results, the North American travel was a drag on the results. It was like a low single-digit growth. And like without the North American region, they would have grown double digits. So we'll have to see how U.S. travelers fare.
So maybe that's a bit of a shift in terms of what consumers are feeling in the US, at least around travel and revenge spending. But what about the new offerings, the new products? What's Brian Chesky going to do to try and drive that growth to get Americans spending?
So they are actually considering a loyalty program. And now they're saying with all these new categories, they're able to offer something more compelling than just, the lodging category. So that would be something we'll be very excited to keep track of.
Natalie Lung, she will keep track of it. We thank you very much indeed. Now, let's stick with earnings and let's dive in to one that is showing stronger user growth, down 1.6%. I'm talking about DraftKings. We're looking at Jason Robins, the CEO now, who managed to deliver what was record second quarter performance. Your revenue up 37% year on year, and you're talking about delivering revenue closer to the high end of 2025 for the full year. So what's the investor digestion going on, do you think?
Well, I think right now we have a ton of momentum in the business. We also had some, good luck on the sport outcomes side in Q2, so that was nice. And we're geared up for what is the most important time of year coming up with NFL, and then obviously college sports, NBA, World Series, NHL. Just a big, big time of year. It's when we make our most revenue and acquire our most customers and make our most adjusted EBITDA. So really excited for that, and I think we have some great plans in place, and really expecting strong growth in the back part of the year.
I mean, your shares are up 20% year to date, so it might be why we come off a little bit from our highs overall. But what about the core value drivers here? Like, we're talking about, the sports book friendly outcomes. You talk about how the calendar is looking good for you. But where else are you focused on investing? Because your CFO in particular, Alan, talking about some growth initiatives, and everyone's wondering about these prediction markets that might or might not come to bear.
Well, even if you adjust for the outcomes, we were still up 25% revenue-wise year over year, so really healthy growth. And I think we're seeing, just very strong demand in our underlying customer cohorts. And I also think the advancements we've made on the product side have been huge. We've really built out our parlay offering now. We have the best-in-class and leading offering when it comes to in-game betting. That's become the real growth driver of the industry right now, by far. More growth happening in live betting than anywhere else. So I think really we positioned ourselves well from a product and customer experience perspective. Our marketing has been very effective. I also think on the internal side, we've gained a ton of efficiency through use of AI, which means we're getting more done for the customer and also saving money.
Okay, like what? How are you managing to interject generative AI across the board?
I mean, the simple thing that we've been able to do is get everyone in the company to realize that they can drive value, and it doesn't have to be the engineering team doing everything. So much of, tooling right now through AI can be used by non-engineers, and everyone throughout the company knows that there's tons of manual workflows that can be automated through AI, and we've been on a tear doing that. We've also been working on select projects that are customer-facing too, things like optimizing our trading engine, because a human can't possibly take in all of the data and all of the things happening at the same time when a live game is going on. So having AI agents support that and help make lower level decisions, I think, is also a huge unlock that we're pursuing. So I think the best is yet to come as far as AI, and we've got a ton of organizational momentum around it.
And when you talk about the adoption by your own employees, thinking about how they can drive efficiency, is efficiency what's necessary at the moment when you do have a few well-known headwinds coming up in terms of just costs? I mean, the tax implications that you're getting in Illinois, or what's happening over in New Jersey, for example. I'm also thinking about, Missouri, you're expanding, but that takes a cost up front.
No, you're absolutely right. I think that being able to self-fund some of these things through efficiency gains with AI has been a big driver of our focus. Also, I think there's other parts of the cost structure that we found that we have value that can be achieved too. So really, it's always a balance for us. We're obviously very much in growth mode now. We had 37% year-over-year revenue growth, but we also are constantly looking at how we can be more efficient, and we view the two as very linked. Oftentimes, when you do things that are more efficient, it frees up better time to be spent on, better things for the customer as well.
So I go back to the expansion potentially into prediction markets. I mean, I know it's about federal regulation in many ways, Jason, but what gets you there? What gets you tipping your toe into it?
Well, I don't know that we are going to. We're still evaluating our options. Obviously, it's brand new, and we're watching it unfold right before our eyes, and we're learning a lot as we get educated on the space. So right now, that's been our focus, and we'll see what happens from there.
You have but one sell rating, Morningstar. What would you say to analysts over at Morningstar that convinces them to say, look, at the moment, our price point is where it should be? Actually, I'm looking up the wrong one there, so let me go to my proper DraftKings analyst recommendations. Sorry, live interaction with the terminal right now. I have analyst recommendations, 0 sell ratings, but you have 5 buys.
There you go.
5
Even
holds.
better.
What gets your 5 holds to a buy rating, Jason?
I think just continuing to prove ourselves, performing over time is what gives people confidence in a company. And we've been public 5 years now, so we have a bit of a track record. But we're still a relatively new public company, and we've only been profitable for the last year or so. So I think really showing that we can now grow our bottom line while continuing to post impressive top line numbers, that's our focus, and I think that'll get more people on board.
32 buys, 5 holds, 0 sells. Jason Robins, DraftKings CEO, we thank you very much indeed. Let's check in on shares of Duolingo, surging today. Company posting second quarter earnings that beat expectations, with daily active users growing 40% year over year. Now, the company is also expanding outside of its language learning business, acquiring BeatStar and Country Star, the makers of that service, to bolster its Duolingo music. Here to discuss, Luis von Ahn, Duolingo CEO. You're making M&A, you're showing growth. Just tell us the vision, because many would say, okay, Duolingo is about language learning, but it's actually about a broader education offering right now.
Yeah, ultimately, we want to teach multiple subjects. At the moment, you can already learn certainly languages on Duolingo, and that's what we're most well known for. But you can also learn math and music, and of late, chess. And ultimately, the idea is, we're around 130 million monthly active users. The idea is to have 1 billion people really learning useful things on their phone, as opposed to doom scrolling. That's really what we're trying to do.
Fascinating. 1 billion that use music literacy with the NextBeat acquisition. As you say, growth in chess seems to be off the chart. What's interesting, though, is we referenced your daily active users that did rise 40%, but actually that was the weakest rate of expansion since 2022. Why is that slowing? Will it re-accelerate, Luis?
Yeah, look, we had 40% year-over-year growth, but that's lapping a quarter from last year that had 60% year-over-year growth, which in turn is lapping another quarter from the year before that had 60% year-over-year growth. So our growth has been tremendous over the last several years. And, we expect it to continue being really good. Really good. What gets you there other than product innovation? What you thought would get you there in many ways has been generative AI, whether it's interweaving it within the product itself, Luis, but also you then went wholeheartedly into AI within your own HR ultimately, and that backfired. And I know you've spoken a lot about what happened on April the 28th, but just tell us where you stand in terms of getting employees on board with the use of generative AI. AI is really, really important for us. From the time we launched Duolingo, which was 13 years ago, the idea is to have an app teach you something. And so ultimately, you need some form of artificial intelligence to be able to teach you. So we've always leaned into it. Internally, I sent an email internally. This was not controversial. We've always been, adopters of the latest technology. Externally, I think I failed to give context. The reality is for us, AI is about reaching more people and being able to teach more. We've been able, through the use of AI, we've been able to create way more content than we had before. And also, we are able to provide things like conversational practice. That was not possible before AI. We really think that in order to teach more people and teach them better, we can use AI, and that's the main goal for it.
We're just looking at some visuals of what is Lily, your sort of purple-haired chatbot. She's meant to be a little bit sarcastic and sassy teen, basically. She previously, I think, helped replace you partly on your earnings call. And you said eventually you could just retire and she'll do more and more of your job. But that was tongue-in-cheek. But ultimately, how much more are you going to be able to outsource to generative AI within your workplace, within you?
The goal here is not to outsource to AI. The goal is to use AI to be a lot more efficient. We continue hiring employees, so that's really not the goal. We're just trying to teach better. In the case of teaching people, with something like Lily, up until we were able to do a video call with Lily, we couldn't really teach conversation with Duolingo. The only way we had to practice, or users had to practice conversation, was if they could talk to another human. But it turns out that in learning a language, most users will tell you they would like to practice with another human, but they actually don't. When you show a person the ability to talk to another human in a language that they're not very comfortable with, they just don't want to do it. It's a small fraction of people that are extreme extroverts that are willing to do it. But if you're talking to a computer, you feel like it's not judging you. So for when you are just not very comfortable in the language, it's much better to talk to a computer at first.
That's fascinating because there is a bit of pushback about the idea that maybe generative AI will end up being all we look at in terms of ads, or we discuss to in our social media apps. But for you, with language, where we have some insecurity, that's the case. What about the chess and the way in which you push more broadly? Will that be an integration of person on person or always person on computer?
Chess is different because there's, when you're learning a foreign language and you're just a beginner, you're very nervous about talking. But chess ultimately is about playing the game. So yes, with chess, we do expect to have games for player versus player, so between two people. At the moment, we don't have them. At the moment, we're just teaching you the basics of chess, and we're seeing great pickup for that. But we are going to have games between people. When
do you get to $1 billion, Luis? When's the aim?
Oh, I don't know. It'll take us several years, but I really do think. We're growing very fast in every single country in the world, and the goal is that when people are learning something, they're doing so through the phone and through Duolingo. So we really want to be, the main place where people are learning languages, but also a main place where people get better at math, music. We just did this acquisition of NextBeat, which I'm very excited about, or chess. And then later we'll probably do other subjects. We're not working on any other subjects at the moment, but I would be interested in also having, science and physics and stuff like that.
Come back as you add, as potentially there's more M&A. Luis Ferran of Duolingo, thank you very much for joining us on the earnings. Meanwhile, Firefly Aerospace will start trading today in the New York's after raising close to $900 million in an upside IPO. And the company's CEO, Jason Kim, says that the funds raised for the IPO will go towards ramping up the cadence of its Alpha rockets and fast-tracking other product lines. Now, he spoke with Bloomberg earlier this morning.
We got orbital flight heritage on our Alpha rocket on our second launch, and we landed on the moon just in March of this year. That's something that's really hard. Space is hard, but landing on the moon is even harder, and this company did it successfully. And then if you look at what we're doing, we have a production line of Alpha rockets, and we're building our Eclipse reusable 16-ton rocket, as well as lunar landers annually, and we're building Electra spacecraft to serve the Golden Dome customer, space exploration, as well as commercial tech. And so if you look at what the CEO of NASDAQ said, Adina Friedman, the markets are strong and they're growing. And we've gotten really great reception and conviction from investors over time. And so this is the right moment.
You're going to raise almost $1 billion. Looks like $868 million. Jason, what are you going to do with the money?
Well, it's kind of like what I already said. We're going to rate up. We're going to continue to increase capacity because there's so much more demand in the space markets right now because of national security, because of space exploration to the moon. The moon is really important. It's the ultimate high ground. It's also important if we're going to put humans on the moon again, starting in a couple of years. We want to know everything about the moon. We want to put more lunar landers up there, more infrastructure, more power systems up there too. So we want to make the moon more frictionless for everybody, for America first.
Firefly CEO Jason Kim there from the NASDAQ. Shares indicated to open at $70 a piece. IPO priced at $45. Let's get back to a key story in tech today. President Trump's plans for 100% chip tariffs. But there are carve-outs. Let's bring in Bloomberg Intelligence senior analyst Mandeep Singh for more. Shares actually going higher for many chip makers and indeed companies that make things with chips in them because Apple gets a carve-out because it's building in the US, TSMC we understand, Samsung. How are you managing to dissect which company is going to be implicated here?
Well, look, when it comes to Apple, they have benefited from, outsourcing to TSMC. So to my mind, it makes it very hard for Apple to do something on their own. Like, think of how Intel has struggled over the years because it's an IDM versus an Apple and NVIDIA being a fabless chip design company and then letting TSMC manufacture. In fact, TSMC manufactures for everyone. So if Apple was to invest $150 billion in process node technology and packaging, would it really make them better in any way without TSMC? And so I'm just thinking, where is that CapEx going to go? Glass is clearly one of the components of Apple's bill of materials, maybe less than 10%. The other is camera. They're not going to make cameras. So what is it in Apple's bill of materials where Apple is going to set up a factory and say, okay, this is what we are going to invest in? To my mind, data centers, hyperscale data centers is the one thing which Apple needs as well. Even though they vertically integrate, they have a services business. They need data center capacity. That's where their chip design actually could help. So that's the natural thing to do. But there is still so much kind of hype around what they could end up doing and not enough details for me to say, okay, this is what they would end up doing in the US.
Yeah, because it's $600 billion, and thus far we understand, of course, the glass, we understand servers, we understand maybe data centers, as you say, but higher end manufacturing and indeed manufacturing academies to help train people. Yeah. But I go broader for a moment then. When you are hit by a headline, 100% tariffs, who do you worry about?
Well, I mean, look, there are companies like the Japanese companies. So if it's a Sony and you are sending your modules to the US for all types of use cases, I think they could get hit. And they're not investing big time in the US, so they haven't announced anything. Samsung and other guys, Micron, they have done that. But that's where will the real investment show up?
Yes.
So it's one thing to announce something, it's another thing to have a tangible idea where you know you can create a supply chain and do things here. Like Texas Instruments has done a great job diversifying their fabs over the years. Can't say the same about others, right?
We'll see where the money lands. Mandeep Singh of Bloomberg Intelligence trying to discern the latest headlines for us. But that does it for this edition of Bloomberg Tech. Don't forget to check out our podcast. You can find it on the terminal, as well as online on Apple, Spotify, and iHeart. This is Bloomberg Tech.